Hello guys, welcome back to my YouTube channel. So today we are going to learn about another important concept about investing in government bonds in Kenya. So as always, let us jump right in to the conversation. So first, we start by defining what is a bond. And we say a bond is a debt instrument where an investor lends money to the government for a fixed period at a specified interest rate. So a bond is a way of the government raising funds by inviting the public to come and purchase debt instrument. So the debt instrument is the bond. So you will enter into a contract with the government, you loan the government some money that they want to use for projects, and then the government pays you back interest rates, and then at the end of the agreed period, the government also returns you your money that you loaned. So it is the interest that you earned are called coupons, and then your money that you give to the government will be returned to you at the end of the period, which is called redemption debt. Debt to mean the time. Okay, so let's proceed to answer other critical questions that we usually ask when discussing such videos. So one, why is the government raising money through bonds instead of external borrowing? So we are used to government borrowing money every now and then. Whenever the government drafts a new budget every year, they always go to borrow money. But now, why is there this concept of bonds? Why don't the government just borrow money as usual? And the answer to this is when a government floats a bond, it is trying to reduce reliance on international debts. It is not every time that when we want money, we go borrowing from World Bank, we go borrowing from China, we go borrowing from IMF. It is actually prudent for a government to raise money through bonds as opposed to going to borrow. So that is the first reason. A government floats a bond so that it can reduce reliance on international debt. And the second reason is a government floats a bond to stimulate economic growth. This is to mean that without floating a bond, on a normal day, we usually see a lot of Kenyans, they earn decent salaries, they run very successful businesses, but then after doing their mathematics and taking out the net earnings, where do they take the money? They keep the money in their banks. Some also take the money out of the country to offshore accounts. So then what happens? Our domestic economy remains stunted. Okay. But when a government introduces a bond, it encourages the public to take the money out of their bank accounts and introduce that money into circulation. So that is like an economic strategy that is used by the government to encourage people to bring back money in circulation. So there are two strong reasons as to why a government decides to raise money through bonds as compared to raising money by going to borrow. So I believe the point is home. Let's go to the next question. What are the types of bonds available in Kenya? There are three main categories of bonds that the government usually floats. So floating a bond is like making the bond public, inviting the public to come and purchase the bond. That's why I'm using the word floating. Okay, so there are three types. Number one, treasury bonds. So treasury bonds are long-term bonds that can go up to 30 years. So you give the government your money and then you earn interest for a period of 30 years. Once you sign this contract, you agree to leave your money with the government. So you will be earning interest called coupons. And then at the end of 30 years, the money that you gave to the government will be returned to you. It is called redemption. So there's a second type called infrastructure bonds. So infrastructure bonds, they are also bonds, but they are specifically for funding capital intensive infrastructure projects. Let's say building a dam, constructing a railway line, constructing maybe a highway. So the government floats an infrastructure bond. And one key distinction between infrastructure bond and the others is that an infrastructure bond is tax exempt, meaning if you purchase an infrastructure bond, all the interests, all the coupons that you are going to earn will not be taxed. Okay. Now, there's a third type called treasury bills. Treasury bills are also bonds, but then their key distinction is that they are short term as compared to treasury bonds, which are uh, 30 years, 20 years. A treasury bill has got short term duration, 91 days, 182 days, or 364 days. So when you go to buy a bond, you have to first sit down and decide which type of bond do you want. Are you ready to wait for up to 30 years to when you decide to buy treasury bonds, or do you just want to buy a treasury bill that has short-term duration? So that is a choice that you have to make. Okay, we proceed to the third concept. So how do you start? How do you get started? Sorry, how do you get started with investing in government bonds? So to invest in a government bond, you have to have an account. Long before the central bank introduced a technology, the procedure of buying a government bond was quite hectic. You had to present yourself physically at the central bank, and then at the central bank, they will give you a form that is called a CDS form. We already discussed CDS as Central Depository System. So they will give you this form. You fill this form, and then they will open an account for you. And then, whenever they will float the bonds, you will be invited to come and make a bid. But that is now long gone. The Central Bank of Kenya introduced a very innovative solution that is called DhowCSD. So DhowCSD is a technology that allows you to create a CDS account with the central bank so that you can log into this account from wherever you are, from your phone, from your laptop. You log into this Thou CSD account, and then you check out which bonds are on offer so that you can make a bid. So once you bid on these bonds, then the central bank will then vet all the bids that are received, and then it will allocate to whoever has been selected. So the bidding process is competitive. They have their own underlying factors that they consider, who to pick, who not to pick. That is a prerogative of the central bank. But for now, the information that you need is that for you to invest in government bonds, just Google, okay, go to your browser and search Thou CSD. There are even apps for this Thou CSD. If you're using Android phone, if you're using an iPhone, just go to your App Store and search DhowCSD, then download the app. If you're using a laptop, just Google DhowCSD. You will find the website. Go to that website, follow the procedures, and create an account, and start following on how you can participate in investing in government bonds in Kenya. Also, just to add, is that once you are logged in, you will always see a pattern that the treasury bills, which we call the T bills, they are floated weekly, meaning every week when you go to your DhowCSD account, you will find a new T bill floated. So you just bid on it. If you prefer T bonds, which are treasury bonds, they are floated monthly. So every month, every time you log into your DhowCSD account, you just monitor and keep track of the T bonds that are floated monthly, of the T bills that are floated weekly, and then you make a bid. The key word here is that you make a bid. Bonds are not given. You have to bid for the bond, and then the CBK will then allocate according to their own guidelines. Okay. Now, the fourth question that we're answering today, then how do you earn? So, let's say you have opened a DhowCSD account, all right? You have followed through and you have placed bids on T bonds or T bills, and then you have been considered and you have deposited the funds. So now, how do you earn? So for T bills, the mechanisms of earning from T bills are through something called discounted bonds. So a T bill is discounted, meaning if the government has floated a T bill that is costing 50,000, when purchasing it, you will purchase it at a discounted rate, depending on the interest rate at the time. But for this example, let us just use rough figures. So if the T bond, if the T bill, if the T bill is 50,000, you will purchase it at a discount. So say the government will tell you, give us 45,000. Okay, give us 45,000 today so that you will be able to redeem your money at 50,000. So technically, you have earned 5,000, right? That is called discounted bonds. It's a value, its face value is 50,000, but the government is telling you to pay 45,000 to have it. That is a T bill. On the other hand, a T bond earns you interests that are called coupons. So for a T bond, if it is 50,000, the government will require you to pay the whole 50,000, okay, to buy it. But then you will be receiving interests that are paid semi-annually. So semi-annually means twice a year. After every 6 months, you are paid interest. So you are paid interest in June and December. June and December. And then at the end of the period that you agreed, the 50,000 that you deposited is returned to you. Okay? So that is how a T bond and a T bill uh, works. Okay? Now, once you invest, it's just very smooth. Uh, T bonds, T bills are the most secure forms of investments. Okay? They are almost risk free. Why? Because it is the government. You invest your money, you are assured that you are going to get your interest rates not fluctuating. You are assured that you are going to get your money back. Unlike maybe stocks, unlike other forms of investments where you can put your money now and then you are told, due to economic factors, the interest rate has gone down and therefore the money that you are expecting is not what we promised you. No. In T bills and T bonds, what we have been promised is what we are going to get. Very, very attractive type of investment. To proceed with our discussion, let's also just consider a few crucial information that you might need to take home. When investing in T bills and T bonds, the minimum amount of investment is 50,000. Okay, so at any given point when you are placing your bid, make sure that you have 50,000 ready, such that when you are considered for a T bond or T bill, you have the 50,000 to pay. Okay. Now, it is also important to consider that the bidding process is very competitive. You are not guaranteed that if you have the DhowCSD account and if you bid that you are going to be considered. No, it is very competitive. So there is a way to work around this, which is called MMF. When we talk about MMF, these are uh, companies, financial intermediaries. These are investment banks. These are stockbrokers who are banking on their corporate influence and economies of scale to always win bids whenever a government floats a bond. So if you have your money, let's say you have your 50,000, instead of you making an individual bid, okay, you can actually increase your chances by taking this 50,000 to an MMF, so that the MMF will now use its power, its corporate power, to bid on the T bill or the T bond, and then most likely it's going to win. So if you bid individually, your chances of being considered are quite less. But if you win, you will get higher returns. On the other hand, if you take your money to an MMF, the chances of an MMF winning a bid are quite high, but the returns that we're going to get are slightly less. Why? Because the MMF will have to cut its commission for working out the competition, the bidding, and managing your money. So these are the options that you have. Will you decide to go individually to bid against these big companies, or will you take a back seat and put your money in an MMF so that the MMF will now bid on your behalf? You just wait for your returns. So guys, this marks the end of this video. It was about investing in Kenya's bond market. The bonds are being floated by the government, and for you to bid, you need to open a DhowCSD account. DhowCSD is an innovative technology designed by the central bank. You log in, you create an account, and you'll be able to bid. But you will have to decide, are you going individually or are you putting your money in an MMF? So that marks an end, guys. And if you found this video helpful, please subscribe, like, comment, share as we continue to educate each other about the financial market system in Kenya and the investment options that are available for you. Thank you so much.